This is Jay Martin.
All right, here I am with Mark Brennan, the CEO of Cerrado Gold. Mark, thanks so much for coming on the show.
Jay, thank you so much for having me.
Well, I'm excited to jump into this story and get it in front of my audience. I think Cerrado is a company that investors should be looking at. Over the next 20 minutes, we're going to get into why that is. Two big highlights: your project in Argentina, cash flowing gold producing project. I want to talk about this, the numbers behind your Argentina projects, and the near term upside and how we're going to get there. And then also we have to talk about Brazil, because your project in Brazil is one that has been discussed in the industry as having the potential to be the world's lowest cost gold producer. So obviously we're going to jump into that. To be honest, Mark, I'm equally curious about both. So where do you like to start telling the story?
Well, I guess we acquired we started Cerrado in 2018, basically on the basis of the Brazilian assets. A couple of geologists who we've known for 30 years brought us this project. They actually discovered the Volta Grande project, which is Belo's son's project, with 7.4 million ounces, the largest undeveloped gold asset in Brazil. And we've known these guys for a long time. They brought us this Monte de Carmo asset, and they said, hey, it's going to be north of 5 million ounces. We did some due diligence, and we thought the thesis was valid, and so we kind of jumped in. Then in March of 2020, we acquired Minera Don Nicolas in Argentina, and the reason for that was just that we felt that we had a good project that on the very skinny basis, would be an 8 or 9 year mine life, producing 50,000 ounces a year, generating 30 million a year of cash flow. And so we thought it was a good acquisition cost, and it was good for us to be in the production domain. But what we're finding with both assets is that they're both still very much in their discovery kind of mode, and there's still a lot of property in both Brazil and Argentina to go and exploit, to grow the resources very dramatically, and then likewise, we're looking to run a parallel path into production. We're hopefully getting Brazil in production, by 24, and obviously ramping up production in Argentina. So I guess if I look at it from the basis of Argentina, we have 334,000 hectares in one of the most prolific gold belts in Argentina. It's called the Deseado Massif. You got Cerro Negro, which is now owned by Newmont. That asset was producing about 350,000 ounces a year. Basically, they grew that asset over about 8 or 9 years, sold it to Goldcorp, for about $3.5 billion in 2004. So I think that we have lots and lots of scope for growing the Minera Don Nicolas to be the next Cerro Moro, now which is Yamana's property right next door to us. What we're looking at is very prolific belt, very underexplored. We have 334,000 hectares. I mean, that's the size of some states in the U.S. It's a big land.
Yeah.
It's an epithermal belt, the same size as same kind of types of mineralization you see in Nevada. Yet you've had very, very limited exploration that you've seen on a comparative basis to Nevada. So I think there's a lot more ounces to be found there. I think on our property, again, we acquired it on the basis that there's an 8 to 9 year mine life. At 50,000 ounces as a base case. We've now taken that where we come out and said next year we're targeting 70,000 ounces. In 2024, we're going to go to 90,000 ounces. We're funding it all internally through the operations that should generate 20, 30 million of free cash this year. And then on top of that, by the time we get to 2024, where we're producing 90,000 ounces, we should be generating $50-60 million of free cash a year. So the reality is that it's still very much in its growth, and it's in its infancy. And we see lots of different areas to develop, to go and actually look at deriving greater resources, as well as putting into development. So we're pretty excited by that story. It's still a very early stage story with lots of upside to come.
Yeah. Now, when you completed the transaction, you were looking at 30 to 35. I know you just 30 to 35 million revenue. I know you just put out news a couple of weeks ago, and you're well on pace to hit the numbers that you're discussing here, right? Yeah. Moving towards 50 million in revenue. So, I've heard you discuss this. I'd love to have you address it on this show. Getting cash out of Argentina can be tough. And so let's start there, Mark.
Yeah, what we're looking at with Argentina, when we went into Argentina, they didn't have the currency controls that they have now, and it's very expensive to take your money out. It's about 70% cost of taking your money out, so it's not something you really want to do for now. But one of two things are going to change. Either they're going to remove the currency controls and everyone's going to win, or they're not. And what's going to happen in that circumstances is that you're going to find that companies are going to, because of the 50% inflation rate in Argentina, you can't just leave that money in a bank. What you need to do is use that money. And basically, lots of companies with big operations in Argentina are starting, first of all, to put the money into optimizing their own operations, growing their own operations. And the next shoe to fall is going to be acquisitions.
Yeah.
And so the reality is that those acquisitions are going to generate, a fairly healthy M&A environment. And frankly, while we're looking here, we think we see lots of growth for potential for our assets. If we had a major come to us and say, hey, we're going to we'd like to take this asset and we'll give you stock in exchange, that would certainly be something I'd very seriously consider. So what we're looking at, again, if you look at the growth of Cerro Negro, which is the Newmont property now, that thing took about 10 years to grow and drive, and then it became a multi-billion-dollar asset. We still feel that we have the potential to grow MDN into a multi-billion-dollar asset. So we're not in a hurry. As I say, it's not costing us any money to have this asset. We're growing it and growing it. We've got a great jurisdiction with lots of gold, and so we're patient, and so we'll grow this over the long term and see what happens to the politics.
Okay, I like that. Yeah, and good point, right? There's companies far larger with the exact same problem, right, with their capital. And what would they be most likely to do with it? Expand their operations in country. You and your team have a ton of experience in South America and have built and sold a mine together. So, it's not foreign territory necessarily.
No, not at all. And I think, again, we've had lots of interest. Believe it or not, we've had lots of interest by people to acquire that asset.
No doubt.
And right now, unless we get the right price tag, it'd have to be a pretty good one. We're just not interested at this point.
Love that. Okay, well, let's talk about Brazil a little bit and catch my audience up on recent drill results and what you're looking at down there.
Well, what we're doing right now is we have a 15,000 meter infill drill program going on. And so basically what we're doing is we're driving a feasibility study to be completed by the end of the first quarter of next year. This is a follow-on to the PA that we published last September. The PA came out with the 617 million NPV on a U.S. basis after tax, with a 95% IRR, which is probably the best IRR I've ever seen in an asset in my life. We're going to beat those numbers. So the reality is that, as you mentioned earlier, you alluded to, our PA reflected a all-in sustaining cost of $430. Which would make this the cheapest gold producer in the world for the first 5 years. Again, what our objective here is to convert all those inferred ounces into the measured indicated category. We're looking to extend the mine life, and we're looking to drive the NPV. And I think the way it looks right now is we're having quite a bit of success, and we're very hopeful that our numbers will be better.
And what's next for the project, Mark? What can investors look forward to?
Yeah, there's going to be two parallel paths. So basically, you'll have one path, which is the development. And so on the development stage, the feasibility will be completed by the end of the first quarter. And then we'll be in construction in the third quarter of next year. All right. So it's pretty quick. It'll be a very rapid, and then after 12 months after that, we'll be in production. So it's coming up and it's creeping up pretty quickly here. On top of that, what will happen as soon as we finish this 15,000 meters of infill drill program, we'll look to we have 7 rigs on the property, and we'll look to use those rigs to go out looking for exploration. When we acquired the project, it didn't really have a resource. We're at 1.3 million ounces right now. And again, we haven't, in our minds, we have not discounted the fact that this can certainly have 5 million ounces over the medium to long term. So we just got to go out and put the drill rigs in the ground and see where we go. So we see lots and lots of growth, both from the development side where we get value. When we're generating the first 5 years of production on the PA, we're generating 150 million of free cash per year. That's going to give us a lot of cash to drive exploration and other development. So we're pretty excited, and what we're working on now as well is we're working on funding. Even though we haven't completed the feasibility study, we still have interest for people to fund this project. And a lot of people are concerned about dilution that's going to come down the road. I think we're going to surprise a lot of people. So from that perspective, it's a first-class asset in a first-class jurisdiction. It's not both of these assets are not old regurgitated assets that because gold price is higher have actually come to make money. These are brand new assets that are still in their growth phase, and there aren't that many assets like that out there. So we're pretty excited. We're very, very lucky to have these assets, and we're pretty excited by the prospects for both of them.
I have to pull on a thread there, Mark. You mentioned some shareholders are concerned about dilution, and you think you're going to surprise them. So what kind of hints can you give us there?
Well, it's not. There are lots of different elements of how one can fund, and frankly, we're looking at a number of solutions that will really minimize dilution. I think I'm somewhat restricted on what I can say there, but I think at the same point, there are vehicles or there are instruments out there that are very efficient cost of capital while not costing substantial dilution, and that's hopefully something that we'll be able to deliver to the street in the very near term.
Okay. So we have potential funding news coming out in the near term. In addition, Q4, more news coming out of Brazil. If we're doing what we think we can do, we're on pace to be in production in Brazil by 2024. And run the first 5-year production numbers by me one more time.
Yeah, it'll be 150,000 ounces per year on average, at an average cost of $431 based on the PEA. At $1,600 gold, that generates about $150 million a year. At 1,800, you're probably closer to 200 million a year.
Okay. All right. Now, what can you tell me about management ownership inside the company, Mark?
Yeah, and that's a really important element, Jay, because the reality here is we think like owners, and management directors own 40% of the fully diluted shares of the company, and so the reality is that when we make decisions here, we're making those as owners, and how it's going to impact our lives, our futures. As opposed to yes, we always have our shareholders' interests at heart, and that's something that most managements are looking after. But there's a separate and distinct decision-making process when you do that as owners of a business, and that doesn't mean that we're entrenched, that we need to be here all the time. It just means that we can look at the best interests of what we think are to maximize the wealth of shareholders, because we are them, right? And I think that makes us very strongly aligned with all shareholders. For example, our compensation is very low compared to most other on a salary basis, very low compared to many companies, to our peer group. And the reality is that where we want to make money is in the market with our shares. And so we'll look at decisions that may sometimes have a little bit of a longer perspective, just in order to make sure that we maximize return to our shareholders. But I think, again, I think that the good news for shareholders is that we're not entrenched. We don't feel that we have to be here or we deserve to be here as management. But as long as we can push forward the best interests of shareholders, that's all that really matters.
Yeah. And that's the best answer to that question. And I tell my audience this all day long, right? You want to invest in entrepreneurs who get rich when they make us rich. You make money when I make money, right? And that's hyper critical. Absolutely. Okay. I want to just jump back to Argentina for a quick minute, just to touch on near-term catalysts. So I feel like we covered that in Brazil. I want to wrap up by going back to Argentina. The prospective shareholder is going to say, okay, great, Mark, but what's going to make the share price go up respective to Argentina? So what's the near-term news flow they can look out for?
Near-term news flow to Argentina will continue to have good production and good cash flow generation. We're targeting 50,000 ounces of production this year. That's up from 43,000 ounces last year. But it's really a growth year this year. It's kind of like it's not necessarily a growth in production. It's really a growth in life of mine. We're also building a second, operation, which is a heap leach operation that'll be in production in the first quarter of next year. taking us to that 70,000 ounces next year. So this is kind of a year where we've turned around since the acquisition of the project in March of 2020. We've turned around the operation. We've now got it, the production steady. Now we're looking for growth, and now we're looking to drive the growth. And so what we have to do is we have to harvest a little bit, and that's what we're doing right now.
Okay. Now, Mark, I want to back up a bit and just talk about the gold sector for a minute, if you don't mind. We had our Vancouver Resource Investment Conference in Vancouver 2 weeks ago now. The PDAC is coming up next week in Toronto. And I would say that the sentiment in the sector has been a bit confused. That's how I would describe it. And I've been in the industry for maybe 11 years, so not nearly as long as yourself, but I'd love to get your perspective on investor sentiment today. You could say that macro trends are all pointing towards a bullish gold market. The market's been a bit sleepy, though, over the last 6-12 months. And what are your thoughts there? How do you process this?
You know what? I'm not so much intrinsic gold analyst or bull or whatever. I mean, what I look at is in March of 2018 or 19, excuse me. Gold prices were $1,200. It's now at $1,800. That's a pretty good run in a moderate period of time. And so in terms of the context that I look at is, I agree with you entirely. I mean, I think all the indicators are that gold should be moving higher. Cost of production is getting higher. The cost of the resources are harder to find. So you have inflation. You've got a lot of issues that are on a global basis that are concerning that you'd think would point people towards gold. But I guess at the end of the day, what I look at is, okay, here's the gold price. Where can I produce and make money? No matter what the gold price is, and so I look at it from the perspective that I think everything's pointing upward. But I would say that even at $1,800 gold, I'm pretty happy with the gold price.
I love that. Yeah. And I love how you began that answer by saying I'm not an intrinsic gold bull, which is meaningful because, I think critically about any dogmatic approach to an asset, right? Whether it's gold, silver, Bitcoin, doesn't matter, right? We need to be skeptics at the best of times.
Yeah, I mean, listen, if we look after gold at 1,800 or 1,600 or whatever the number is, then when gold goes to 2,000 or higher, then we're in great position. Right. And that's kind of how we kind of measure ourselves and put ourselves on the lowest possible gold price. Yeah,
100%. Well, with your all-in sustaining costs, that's incredible. All right. Okay. All right. Look, Mark, this is a pleasure. I'd love to have you back maybe in a couple months to discuss some of the near-term news that we touched on today and get you back in front of the audience. But thanks so much for making the time today. I appreciate it.
Well, thank you so much. And I really appreciate your questions and engagement. So I really appreciate it, Jay. Thank you.
All right. All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness. And the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right. Thanks again.